Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of S&P 500 and Nasdaq, and cover the economic calendar for tomorrow, 10-year treasury, crude oil, and so on and so forth. For the most part, we're approaching all-time highs, and I think the market for the most part is waiting for the CPI and PPI numbers, which are inflation numbers, next week, so Tuesday and Wednesday. For the time being, it's pretty much consolidating sideways. S&P 500 is moving to the upside faster than Nasdaq. And I think that's because it's broken the levels, and ever since it's broken the levels, it's just been going up. I'm going to cover the economic calendar before I go over the support and resistance and price action movement and how I expect the market to move overall. In terms of Friday, May 10th, 2024, 9 a.m. we have Fed Governor Michelle Bowman speak. 10 a.m. we have consumer sentiment preliminary. At 1 p.m. we have Chicago Fed President Austin Goolsbee and Minneapolis Fed President Neil Kaspari speak. At 1:30 p.m. we have Fed Chair for Supervision Michael Baer speak. And then at 2 p.m. we have monthly U.S. federal budget. Now, the thing is, though, we have a lot of Fed speakers for Friday. And then on Monday, we have another two Fed speakers. So technically, the markets could move up and down in terms of a bigger range than it could be. And on top of that, on Fridays, they tend to be on the low days because of option contracts, in my opinion. But either way, for the most part, it's going to be consolidating sideways from what I think is going to be happening based off the price actions and so on and so forth. So I'm going to show everything. I'm going to go over QQQ first, and then S&P 500 / SPY. So specifically looking at ETFs, QQQ for Nasdaq and SPY for S&P 500. Now, in terms of the 5-year chart, in terms of long term, pretty much arching up to the upside, MACD line. And then, like I've always showed in the past, just for new viewers, just in case, upward trend resistance line dating back since 2010, got capped, and then upward trend support level. So within this channel, and then 2020 to 2022 broke through. In the S&P 500, basically same channel for the most part, but having broken through. But then we got stuck underneath again, and we're pretty much trying to get back up to that level and maybe breaking through it again. We'll see. Now, in terms of 1 month, 3 month, 6 month, all showing to the upside actually for the MACD line. So technically, so for example, right here, we have an upward trend resistance / support level. So resistance back here, dating back since November 2023, support, support, support. And then here we saw resistance, yeah, false breakout, but still, even false breakout here, nonetheless, staying underneath it. And then we have a downward trend resistance line that's on the S&P 500 as well. Three touch points, and then a false breakout versus the S&P 500. It only had 3 touch points, no false breakout, but nonetheless it broke through it. And again, I'll go through that soon. But either way, downward trend resistance line, pretty much breaking through this one. The problem is we have 2 combined, plus we're reaching all-time highs, so it's quite a bit to break through. Now, currently for QQQ, we're at $441.02, and to break through this, the longer it takes, the higher the resistance level will be. Now, in my opinion, again, this is just my opinion, I'm not a professional, so please do your own due diligence and research before buying and selling, but I think pretty much for the most part, we're going to be moving sideways until the inflation numbers come in. And the reason why the importance of inflation numbers is if they come better than expected, so lower inflation numbers and inflation is decreasing, then the chances of the Fed cutting interest rates increases. And that's all the market pretty much cares about for this time being. Again, in my opinion, I think the Fed most likely will be forced to cut one interest rate towards the end of the year, and that's only because to satisfy the market. In my opinion, technically they wouldn't want to, but only to satisfy the market, they're probably going to cut interest rate once, and that's best case scenario. And that's the narrative that hypothetically the chances of them increasing interest rates have been pretty much happening with, for example, the jobless claims today and so on and so forth, claim numbers and all stuff. So either way, so to go sideways, it does not necessarily mean, for example, we're going to be stuck at 441 the whole entire time. It's more within hypothetically this range of 435 all the way to 400 and the 446, 448. It's predominantly within this downward trend resistance line, just hovering down this downward trend resistance line, or hovering within this range with this upward trend resistance line as well. So it all depends on when we meet these levels. Now, again, we're reaching all-time highs. So 450, give or take a couple cents and all stuff, is the all-time high. And then once we pass that, if we do it before the CPI numbers, that's good. But the problem is if the CPI numbers are lower than or higher than expected, so inflation is increasing, then we would just get dragged back down, and that would be like a sell-off point where in terms of previous sellers sold off and then they're selling off again. Now, if we reach it within that time frame or after, with the inflation numbers being better than expected and inflation's reducing, then now we're going back up to the level that with the 10-year chart, right about here. So it all depends on when we hit it. But if we look at it quickly, I think it was $466, give or take, or $462, depending on when we hit it. But I think by the time I covered then till now, we're looking at $466. But I'll cover it when we get closer to that after the CPI number. Now, within the ranges, so let's say within tomorrow and all that stuff for the Friday, we're pretty much looking at hovering about 400. Yeah, so it's showing right now about 443. The only problem is I'm pretty sure we would have false breakout into the 444 because there's resistance at the 444 horizontally. And again, there's a gap range of resistance between 446 to 448. Even if we get to 446 and 448, pretty much consolidate. Probably that would be consolidating until Monday. QQQ, the reason why Nasdaq is not moving that much is because there's a bunch of resistance within these range versus S&P 500. There's not that much resistance within the range for some reason. So that's good, but it's just not as much as Nasdaq. Now to the downside, we're looking at, so again, those are the levels to the upside, but for the downside, we're looking at, support at 440, but ultimately 438 pretty much it looks like, and then the 435. Now I don't think we're going to go lower than 435 personally, unless again, later on Wednesday or Tuesday in terms of inflation numbers, in terms of PPI and CPI. But for the time being, sideways, I think 435, 434 would be pretty much holding us, collides with the moving average as well. And then if we do go lower, we're going into that pocket of 433, 432, 433 and some change. There's a bunch of support around that horizontally range for the most part. And then from there is the 430, but that trickles down. I don't think that's going to happen personally on Friday. But if we do go lower than, for example, the pocket of 432, 433, somehow, I'll keep you guys posted. There's a possibility. Again, tensions in the Middle East. A lot of Feds are speaking tomorrow. Options contract, so on and so forth. If we were to drop down, let me just cover it just in case. The 430 is a support level, but at the same time, the 429 and 428 and some change colliding with the moving average would be the utmost lowest in my opinion, and then we bounce back up to the upside. But that is if pretty much everything hits the fan tomorrow, which I do not expect to happen because with the MACD lines, they're all pointing to the upside. So in terms of 1 month, 3 months, 6 month, 1 year, all pointing up to the upside, and that is including with the Nasdaq and S&P 500. And some of them might be crossing over soon. They're not crossed over yet, so they're somewhat in the bearish territory, but it's predominantly all in the bullish. So yeah, there's that. Now for the S&P 500, I'm just going to show the 5-year. It's showing the exact same thing as the Nasdaq. Basically, we closed at $520, by the way, and 17 cents. And the 5-year chart shows that it wants to cross over to a bullish territory as well, but it's in the bearish territory at the time being. But then the 1 year, the 6 month, 3 month, 2 month, all in the bullish territory. I think one of them was in the bearish. It might have been the 6 month, I think. And then, so it's in the bearish. It's about to, it just ticked anyway. So it's trying to cross over to a bullish anyway, / has crossed over to the bullish, so showing more upside. With this one, there's a lot more room to grow. Because, for example, for the Nasdaq, it's pretty much approaching that 2010 upward trend resistance line, as opposed to the Nasdaq / SPY has so much room to grow for the 2010. So this dates back since 2010, upward trend resistance line, upward trend support, and support for the major crashes. And there's the ceiling is there's a lot of room to get to the ceiling as opposed to the Nasdaq. And the Nasdaq did break out through, and then this one didn't. Maybe a false breakout back here in 2021, but there's a lot of room to grow to the upside. So that's, in my opinion, probably the reason why SPY is going up, even on days that it's just pretty much consolidating for the most part. But yeah, so 6 month, 3 month, 1 month, and 1 year, all pointing to the upside. And then the thing is, though, we're reaching all-time highs. The all-time high is pretty much about $426, give or take, or $526, give or take. And then the resistance levels that we're going to be seeing, there is resistance at the 421 and some change, so that's going to stop us potentially. And then ultimately, there is resistance to 522, but we're looking at pretty much, I think what's going to happen is the 524. The high 523 and then 524 and some change. That's probably going to cap us because you can see it right about here. We got nicked by it and then nicked by it here as well. And then the 426. I do not expect to pass 426 tomorrow. That would be crazy if we did. It'd be awesome, but I don't expect it. If we pass 526, then at that point we just pretty much have to assess it based off MACD line in terms of are we moving the bullish movement or bearish movement, and then go from there and then hypothetically measure based off upward trend resistance levels potentially. But we'll assess it by then. And now to the downside, I don't see much downside. So yeah, there's support at the 518 was a lot of resistance, but hopefully that acts as support after that. And then we're colliding. Well, the thing is though, the moving average is showing at the 512, which is their support. There's a gap of 512 and some change in 511 support gap. But the thing is though, the 515 and 514 high end, I think we'll bounce off that again as well, because we've bounced off that a couple times, and I think we'll bounce off it again. But it all depends on based off what the Fed's narrative are, because there's a lot of Fed guest speakers tomorrow, or Fed speakers tomorrow. So if they point to, which I don't think they will, because usually their narratives are pretty much neutral, right? They're always constantly saying like, we're looking at the data constantly, and then we'll make an assessment. Like we'll leave it to the dates that we're making the assessment. Otherwise we don't say much. And then sometimes they'll say, they could say something very, very nonchalant where they're like, yeah, we still see one interest rate cut and wouldn't be shocked if there's no interest rate cuts too at the same time. So they're like leaving it open-ended where the market might react a little bit, but at the same time, it'll be like, okay, well, they still left it open for one. And like by Monday, it'll recover kind of stuff, right? Like whatever it dropped somewhat, it'll still recover by Monday. But again, Tuesday and Wednesday, we got the PPI and CPI numbers, right? So you got to be careful with that. Now, again, for SPY, S&P 500, we have pretty much a good amount of room to grow to the upside. Everything is pointing to the upside. Anything could change at the same time. The volatility index is low at the moment. So for it to go down, in terms of the S&P 500 and Nasdaq, the VIX is not really active at the moment. So with the MACD line pointing up to the upside, everything is pretty much waiting for CPI, PPI. I don't think anything's going to drastic happen to move to the downside. But again, anything could happen with tensions in the Middle East, potentially out of nowhere, or some bad news could happen in terms of maybe what the Fed might say accidentally by axing one of the speakers. But hopefully you guys like the video. Hopefully you guys enjoy it. If you do, consider dropping a like. It does help with the channel, so thank you so much for that. And then if you guys do want to be notified when I do upload my next video, I pretty much post these daily. Consider following / subscribing so you'll be notified when I do upload the next one. Thanks again for watching. I'll see you guys in the next video. Peace.